Hey, charting for support and resistance can sometimes be a little bit confusing. So I'm going to give you a quick video here on how to locate your support, how to locate resistance, and how many supports and resistance you actually need in order to place your trades. All right, let's get into it. Support is any place the price has dropped and turned around or has slowed down. So you're looking for peaks and valleys. Support is a valley. Resistance is a peak, right? You can look at it on the candle chart. You definitely can see peaks and valleys. So looking here for peaks and valleys. Where is the line chart? Definitely helps. Definitely helps with the peaks and the valleys. Valley. Peak. Slow down and or peak, slow down. Anywhere it pauses for a minute and goes up some more, peaks. But changing it to the line chart is definitely a way to do it too. Go from candles, chart type, and go down to the line. Turn that on. You're looking for high points and low points, peaks and valleys, or places where the price sits. If it sits down for a minute, you see some here, peaks, valleys. This was a double. Ooh, that was a classic double bottom, or the W thingy. W dump dump go. Yep. And so you got peaks and valleys here. This is another one, did the same thing. Dump 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 go. Anyway, peaks and valleys. So if you're using these and a previous support can be a new resistance, or a previous resistance can be a new support, those two zones, once a zone is set, it is good to be that for the next time price comes. Will price always get to it and react and go strongly the other way? Not necessarily, but will something happen at that level? Yes. It may just pause a minute, dance around, or it could go ahead and keep moving, or may reverse. But just know that resistance and support, as Jamie calls it, the parity level. I've heard it called that before too, but just basically support becomes resistance, resistance becomes support. So what was the question about support and resistance besides, you said you changed to the line chart to find it. What was the question about it? Maybe it's in the chat here. You have the trouble determining which support will what? You would determine what is support and what is resistance, or which one to use. From what I've understood is that when you're doing supports, which support to use, that you want to go down from where you are, go down to supports, and you want to go to the most recent supports, right? So there's no reason to go identify, a whole bunch of all the supports and all the resistance levels. Price may go there, but it may not. And then you only really then concern yourself with the supports and resistance that pass your one or two. If price keeps going, if price gets there and keeps going, then you go look and say, well, let me go, identify a few more. But if you're looking at current price, okay, you're looking at current price. We're starting here. Let me make it a little bit bigger. Move you out of the way. Y'all probably can't even see the thing here with the. Okay, we're here, right? We're at the current price. We can go down. We see that there's some support right here because price stopped, and we got a little place there. That's going to be our first support. It's going to be in here. You can turn to the line chart if that's comfortable for you. You can do that. That's going to be our first support in the 451 area. If we went down some more on the daily chart, you're going to go down to your next support, which is going to be the bottom of this red candle, 434. Now, one thing you need to look at too is what time frame are you trading? If you're trading something that's going for several days, then the daily chart is fine. If you're entering a trade that's going to be just today, then you need a lower time frame, and you're going to need to make sure that it's commensurate with what you're trying to do for your trade. If you're trading 2 or 3 or 4 weeks out, then you could go with the daily and the weekly chart. But if you're day trading or you're scalping, you need smaller time frames. All right, so the time frame matters as to where you want to find support and resistance. But a lot of times people go and they'll start with the monthly, weekly, daily. I don't always do that though, because I feel like it can make your chart really crowded. And unless you got a convention or a system that keeps track of which thing is which, like some people do the monthly lines are a certain color, the weekly lines are a different color, the daily lines are a color. And if you got a convention like that, then that's perfect. Okay, so those were 2 supports. I'll put this last one here just because it's so obvious here, but there's 3 supports. I went from current price down to 451, down to 434, down to 424. Hey there, trader. I think I've discovered why most traders are not profitable or are not consistently profitable, and that is the lack of charting technical analysis. Yes, it is a lost art basically. We're looking at the chart. We see that the candles are going up and down, but not really knowing what is really happening. Everything you need to know, almost everything, like 99% of what you need to know, is in that chart. So I've created a training resource that is called Chart Your Way to 100K. It starts with the basics of what is a candlestick, all the patterns, all the things like that. Starts with the basics, and then it goes up from there. It includes candlestick patterns, chart patterns. It includes indicators. It includes what you should be looking at when you're charting, trend analysis, gap analysis, all these different things. Everything you need to go from no charting ability up to being a master charter, you can find in this Chart Your Way to 100K resource training. All right, you can go ahead and grab it at my website, educatortotrader.com. I promise you, this is going to make the huge difference in your trading consistency. All right, go ahead and grab it. If we go back, it's back a ways though. There is a line back here in April around the 445 level, and it did some dancing around back here, so I would put it back on the chart. So actually 4 of them, not 3, right? But you really only need 2 or 3. Please don't overthink the charting thing. Get 2 or 3 good ones, again, depending on what time frame you're trading, and let those work for you. So I went from current price, down 1, down 1, down 1, and this one's down at 424. This is triple Q we're looking at, just general. If you want to look at a certain stock, you can mention that and we can look at it. And then if you're going from here, you're also going to resistance. So you want to go up 2 or 3 of these, up to some peaks, starting at current price. You want to go to a peak. I see one in here where price went up, did its thing, boom, boom. You also have right here where that other line is at 473. There's a line. The top of the gap is also going to provide resistance. So you can count that one as well. I'm actually going to move that into place. 3 or 4 of them, you're good to go. Again, it's important that you kind of have a time frame of what you're trading, because that's going to inform how low you need to go in time frames in order to put lines on or put support and resistance on. The gaps are going to provide support and resistance. Usually the 25, 50%, 75% way through there, that's going to be some. But peaks and valleys. Peaks and valleys. You want to consider the trend, right? Consider the trend. In this case, we kind of have a 2-part trend going. This trend is coming downwards from here. We got a trend line going down. Actually, this would be the trend before today. The trend would be this big red candle would be the top of the trend, but today's candle pushes through that. But if we were looking before today, that would be the trend. But we've also been in an uptrend since August the 5th. Drop in here. This is a trend, and then we went right back up here. This is not a pattern. Definitely not a pattern. So you want to think about the trend, you want to look at support and resistance, and you want to identify your gaps. And your gaps are the close of one candle to the open of the next. That's the gap. Price action going back into it does consider part of that close, but it needs to fill the whole thing. And I used to say it had to be the body, but I've now, been checked. My thoughts have been changed that the wick does count. As long as the wick happened in regular market, not in pre-market and post-market. I don't count the pre-market and post-market ones. If it did it then, it's not that don't count for me.